Good morning. It's Sunday for you. Welcome to the Mortgage Hotline. My name's Sean LaRue, and I'm with Franklin Loan Center. I'm joined here today with Maria Bradfield of Realty Executives. She's a local real estate agent, and from what I understand, you're also going to be joining the programs. And just wanted to welcome you, Maria. Welcome to the show, and looking forward to hearing more about your show that's going to be coming up at. It's Desert Real Estate Today, I believe it is.
Yeah, Sean, thanks for that introduction. As Sean mentioned, I'm Maria Bradfield, and I'm with Realty Executives in Palm Desert. And relative to the show for next Saturday, we're premiering a new show just focusing on real estate called Real Estate Today. Premieres next Saturday, September 19th, and the show goes live at 7 to 8 in the morning for you early risers. What we found out, Sean, is that there was really no informative program in the Valley to give listeners up-to-date information about
That's
the
great.
ever-changing local market.
Very good.
Okay?
Very good.
So we're going to be focusing on that.
Great.
It'll be a caller-friendly show. We're going to have a great time.
Fantastic. Well, I know that a lot of our listeners at the Mortgage Hotline will be interested in knowing more information about the local real estate market. Last week, we were talking quite a bit about the first-time homebuyer tax credit, and I know that it's definitely a topic of concern because there are a lot of first-time homebuyers out there. I know, Maria, you're working with quite a few of them as well.
Absolutely, Sean.
And what I wanted to do was go over some of the terms of the first-time homebuyer tax credit. We have several details to share with you. And as we all know, the first-time homebuyer tax credit does expire. It does expire under the current requirements at the end of November.
Absolutely, Sean. That means you need to close escrow by November 30th, 2009.
You actually have to have the transfer of title in your name closed by November 30th. Now, there are several rumors out there that the tax credit could be extended or changed or whatever might happen in 2010, but I encourage any of you out there that are looking to purchase a home that we only know what we know today and we don't know how it's going to change, for 2010. So definitely take advantage of the low interest rates, low prices, and the $8,000 first-time homebuyer tax credit. So let's dive in here a little bit, and we'll talk about some of the requirements. We know that, as I mentioned last week, that the first-time homebuyer tax credit is for purchasing a home of any kind, new or resale. So you could do new construction, or you could also buy a resale property or bank foreclosure or short sale. And we're going to be talking about short sales here later in the program as well. And we definitely want to hear from you. So if you have any questions about the first-time homebuyer tax credit, please give us a call. You can reach us here locally at 760-416-8475. Or if you're streaming online, you can reach us at 888-589-6397. Now, the definition of a first-time homebuyer is someone who has not owned a principal residence during the last 3 years. And I find that interesting because there are a lot of people who actually sold in 2005 or 2006, and they would requalify for the first-time homebuyer tax credit today, even if you've previously owned a property. And so I think that's a great opportunity for those who have maybe been out of the market for a little while. And so I find it interesting that they would actually qualify you as a first-time homebuyer if you haven't owned in 3 years. Some of the things that we didn't touch on last week is how you claim the tax credit. And I know that I get a lot of questions on the loan side of this regarding how they say in the media that you can actually use the tax credit for your down payment assistance and closing costs. But Maria, I know that you have some of this information here. How would somebody actually claim the tax credit? And is there a form or anything that they need to complete?
Yes, Sean, there is. The form is the 5405 First-Time Homebuyer Credit. And if you have a tax preparer, of course they'll have access to that. But if you're one of those bold and brave people that prepare your taxes on your own, make sure that you file 5405, the First-Time Homebuyer Credit, and it's pretty self-explanatory. And it's easy to fill out. I've actually filled one out myself as practice.
Great, great, great. Well, that's fantastic. And I always tell my clients to double check with their CPA and how the different laws are going to change and how they specifically apply to you, because it is important that your what's going on with your specific situation could be different than what's going on with somebody else. So it's like qualifying for a loan. You're going to qualify differently than your neighbor or one of your best friends. So definitely talk to a professional regarding that, and they can help you fill out that paperwork. So what are some of the types of homes that qualify for a tax credit? And I want to be very specific about this because I've had a lot of my clients actually ask me, well, I'm buying a second home, but I'm not going to reside in it, but I don't own another home, so it's my primary residence. It's the only house that I have. And I want to be very clear about this because, you only qualify for the tax credit if you're buying a primary residence or a principal residence. And that means that, according to the tax codes, you have to live in that property more than half the year. And so that's very important. It doesn't apply if you're buying a second home or a vacation home.
Okay, so let me make sure I get this right. So if I am relocating here to the desert, and I've been renting in LA, come out to the desert, there's great homes for sale, and I have not ever bought a home. I'm going to live there full time. I'm eligible for the tax credit.
You are eligible for the tax credit. However, if you keep your rental in LA and you're working in LA and then you come out here like 3 days a week on the weekends, then that would not qualify you because it is a second home kind of an idea because it's a vacation rental. Your primary residence for work is in LA. Even though you're renting, that's how the IRS is going to look at it, and that's also how you would look at it as well for qualifying for a loan.
Okay, so as long as it's my primary residence, and say I was renting an apartment in LA, I don't have to worry about it. I'm renting an apartment in LA, not my own. Someone else owns it. I'm just a tenant.
Right.
But I'm now buying out here as my primary residence. I'm going to be eligible for that tax credit.
Only if you don't continue renting the apartment.
Oh, that's
So
interesting.
yeah, if you keep renting the apartment and you're there 4 days a week and you're here 3 days a week, then you still wouldn't qualify under the IRS tax code as a primary residence.
It's interesting news, Sean.
Yeah,
I'm sure a lot of our listeners aren't aware of that.
Exactly, and if you have any questions about that, we want to hear from you. If you're a first-time home buyer and you have some questions, definitely give us a call. We definitely want to hear from you. It's important to note also, I thought this was interesting, and all of these notes and all of these points that I'm talking about today can be found at federalhousingtaxcredit.com. That's federalhousingtaxcredit.com. That's where I found this information, and there are a bunch of bullet points about the specifics. But I found it interesting that you can't purchase a home from a family member. Like if you have, and this is an interesting one because I had a client ask me about this earlier this week. She said, Sean, I have the opportunity to buy a home from my grandma, and I want to buy it, and she wants to sell it to me for $85,000. And how can I qualify for a loan? Can I buy that house and get the tax credit? And I said to her, you're going to run into a couple of different things. One is a non-arm's length transaction, right? Because when you're buying property from somebody that you know, it's considered an arm's length transaction. And so the other thing that you run into is different loan to values and different programs if you actually know the seller. So with the FHA program, if you have a relationship or you know that if you know the seller, FHA actually requires that you put down 15%, not the normal 3.5%. So definitely talk to your loan officer about these specifics. And we have a lot more information for you regarding the first-time homebuyer tax credit. Thank you very much for listening to the Mortgage Hotline. We're going to take a quick break right now, and you're listening to the Desert's News Talk Superstation.